Hello, it's Thursday, the 4th of July. We're about to head into Friday, the 5th of July, Asian trading, and then non-farm payrolls to end the week. I think this may be a little bit of a thin, illiquid trade in US trading. A lot of people will take this as a 4-day holiday, but the non-farm payrolls is still one of those events that will cause some volatility. We've had quite a lot of volatility already today in crypto markets and some pretty nasty selling. Let's talk about why. There's a lot of talk about the German government taking 3,000 Bitcoin out of storage wallets and sending it to multiple exchanges, and anticipation of it being sold, on top of obviously Mt. Gox repayments. The Mt. Gox wallets have done some test transfers, and so the market's getting pretty anxious about that. I have to say 3,000 Bitcoin from the German government, really, ETF, to be honest, ETF flows one day are more than that. And so for the Bitcoin to sell off that much because of the German government seems, I don't know, it doesn't quite fit. I think that Tron guy as well offered to buy all of their holdings. So I think the biggest driver of these moves lower have been to do with Jerome Powell, which is pretty interesting. He, the Federal Reserve Chairman, made comments which dampened hopes for a near-term interest rate cut. He said that achieving confidence to lower interest rates will take longer than expected, and he said that getting the balance right on monetary policy kept him up at night. Well, he said it's what he thinks about in the wee hours. He said that the US government is running a very large deficit that needs to be addressed. He didn't say the number, but it's 1.2 trillion. So basically 1.2 trillion more is the government is borrowing more than it is earning. And I do think that that has been a big driver of risk off moves in these cryptocurrencies. The market had been really anticipating rate cuts, but I do think that this potentially is going to be a really good buying opportunity. Now, as you know, I look at cycles, and in Bitcoin, we see really pretty interesting cycles. As you know, we're only 75 days from the halving. And in previous halvings, we've seen really quite nasty, choppy sideways before we continue higher. And I think that that's exactly where we're at. I also note that the last two bull runs were at 152 bars, and we kind of really are only just past halfway. So I really do feel that these pullbacks are buying opportunities, and the best is yet to come. I saw a really cool chart here from Quinton Francois. Thank you, Quinton. Let's take a look at this. He showed that from the halving, from the last three halvings, the high was 547 days. So if we do the same again from each of these halvings, then we have, this high, the next high. If these people, there are people calling on Twitter for the high being in, and we're not going to have another all-time high. If we follow this pattern, which we have done the last 3 times, then we're not going to see the high in Bitcoin until 2026. So I think that we need to look at this as the buying opportunity that potentially it is. And if it's not the buying opportunity yet, then when is it going to come? Now, if we consider that the last, in the 2016 halving, after the halving there was 182 days of chop. After the 2020 halving, there was 160 days of chop. So far, we are only 150 days in. So we're going to see some chop, but when it's over, it will be a buying opportunity. So the key question is, are we at a buying opportunity now? Let's start with Bitcoin. If I look at this on a weekly, let's do something simple here. Now, in previous bull runs, as you know, I always look at these 23.6% pullbacks, or the 236 fib retrace level. And let's go all the way back to previous bull runs, because we can take a look at how this 236 fib, when we broke it, pointed to a bigger pullback underway. Now I've set the 0 here at 1 cent, which is obviously where Bitcoin traded. That's the all-time lows. And we can see here this first pullback here. Look, in fact, let's come back one. 236 fib held. We keep going higher. Here, first time back to the 236 fib. Very nice bounce back to the 38.2. So we saw a bigger pullback. We knew when this 236 fib broke, even on the smaller ones, we can see this. It's a little bit messy because this is a weekly chart, and I actually think the monthly close is more important. But when we made this high and we lost the 236 fib, we got a bigger pullback. And the same has been happening here in more recent times. So as long as you don't break this 236 fib here, so we're going from the low in 2020, didn't break it, kept going higher, didn't break it, kept going higher. For me, this is like my fib trend support. Here, this pullback in January 2021, 236 fib held, we kept going higher. Same thing for this swing here, 236 fib held, we made a new high. And then when we got up here, first time back, very nice bounce. And then when we lost this 236 fib, big 50% pullback. Let's look at this swing here. So we made another swing here, look. 236 fib held, made a new high. This is 2022 now, where you're getting into this high at the end of 2021. Lost the 236 fib, made a bigger pullback. So now here we are in another big swing higher. The corrections of the summer 2023 didn't break the 236 fib. We're still in an uptrend. Didn't break the 236 fib when we tried it in January 2024. And here we are now from the all-time low to this high. This is our 236 fib level at 56,350. That's where we made a low when we did it, but when we had this first swing lower in April. As long as this holds, I don't think we're going to see a bigger pullback. Now, we have seen from previous swings, we can have a look under this level, but as long as we don't close underneath 56,000, even after looking under it, then, we are still in an uptrend. Another thing I would point out, if we go back to this low in November 2022 and we look at these swings, I feel like we're in a wave 4. So we've gone wave 1, 2, remember this fifth wave subdivides into 5 waves. We're in a big wave 4 here. And one thing about wave 4s is they tend to differ in shape from what we did in wave 2. So if we think that wave 2 was a simple correction like this, wave 4 is going to be something different. It'll either be a triangle, it might be an overlapping declining wedge, something like that. But a triangle is very common. And so if we don't make a new low here and we bounce from it, there is a risk in this halving chop period that we end up doing a 5-wave triangle like this before we continue higher, and we chop around in this range between 73 and 56,000. So I'm watching to see what happens here. Well, what would tell us then that this is the low already in, and if we continue lower or if we spike underneath this level, where are we likely to go? As you know, I think that if we spike underneath this level, it's going to be with an ABC correction, and the equal measured move level, if we measure this first swing high to low, project it from here, that equal measured move level where I've got some orders is 54,700. Now remember, this is crypto, so sometimes you can spike underneath it, but if you're waiting for this bigger pullback, that's the level I would look at. Now I think if we go down here, it's not going to be a triangle, but if we don't, so if we do that bigger ABC, 54,700, what happens if we don't come down here though, and this actually is going to be one of those triangles? What's going to tell us? For me, you can see we're bouncing back to hold here on the daily chart. We're bouncing back to hold this 200 moving average. The first time back to a 200 moving average, it usually is pretty good support. Let's go back and look at what we've done previously at the 200-day moving average in Bitcoin. Here in 2023, it was support, then it was resistance when we were underneath it, and then when we got above it, we back tested for support before the next bull swing. So this 200-day moving average is a really big deal. It was the high resistance when we tested it in March 2022. It's just kind of one of those levels. So I would expect the first time back to it as we are today. Oops, let's put those back where they need to be. I would expect the first time back to it today that we have the potential for a pretty decent bounce here, and potentially we are going to set up this triangle consolidation pattern. So much as we're looking at this big 236 fib here, let's hide this. The 236 fib the other way, if we get above it, it's going to tell me that we're going up. At the moment, that's 60,000. So that makes a lot of sense because this 60,000 level has been support so many times. If we come back and try and test it from underneath, it should be resistance. And so we can say holding back above 60,000 would say we're up again. And if we get a bigger bounce, that's going to be our first target back to retest 60,000. Now, are we going up? For me, I haven't bought any yet because it's not quite the bottoming pattern that I want to see. But when I look at these 15-minute moving averages, it does look like potentially we are building a little bit of a base here. So what I'm looking for is a bottoming pattern. I'm looking for a higher low and turn up higher again. I'm looking for a double bottom, something like that. I'm looking for that false breakdown maybe to that level and that recovers very quickly, and that's going to be a buy for me. If you know my strategy, you know I like to look for those kind of bottoming patterns, and I look for Heikinashi candlestick reversals. I really like 4-hour buys. I think that we could set one up. And I don't try, as a trend trader, I'm not always trying to buy the lowest best, get the cheapest price. I'm looking to buy it when I absolutely know it's going up again. And so that's how I'm going to be trading Bitcoin. So not quite enough of a bottoming pattern yet. Really like to see how tomorrow and this week plays out, but don't, no bones about it. This 200-day moving average is a really big deal level for Bitcoin, and potentially we could start building a base here, and it's a good place to watch. It's possible we don't go any lower. Let's take a look at where we are in ETH, because we're in exactly the same place here on the daily in ETH. Today we tested the 200-day moving average in ETH. Let's go back and look at this 200-day moving average and see how the market has reacted to it before. We have to say it's pretty impressive. When we get above it, it becomes support and we're trending higher here. And you can see we've tested it a number of times. This is March 2023, June 2023. It was resistance in November 2022, first time back to it. And it works pretty well, this 200-day moving average in ETH. So I think the first time pulling back to it and testing it today, potentially we could see a pretty decent bounce. Now, as you know, with corrections, I'm always looking at measuring swings. So if this is a bigger correction here in ETH, if I measure this first swing lower, high to low, project it from this high, this is where this C leg, this third leg, is 61.8 of the first swing. And that's a very common relationship in corrective moves. So it would make a lot of sense if we were to bounce from here in ETH. And we can say that if we get underneath this 200-day moving average, and if we get stuck and hold underneath this 61.8 level, which is 3,158, we are likely to continue lower to the equal measured move level here at 2,653. So potentially we're on pretty good support here today, and we could be building a base and launch higher in Ethereum US dollar as well. A lot's going to depend on how the US markets look at this when they come back in tomorrow and say, a lot of people are going to be going, wow, this is actually a pretty good opportunity. Another thing, as you know, I look at as fib patterns. So if I measure from this high to this low here in ETH, when you reverse an 886 fib level, which we did here with a very nice double top swing failure pattern. So that's where you make a high, reverse and you retest it with a false break higher. When you reverse at an 886, the move is confirmed when you trade back underneath the 786 fib level, which we did, and your first targets are the 50%. And this is where we pull back to. Very nice bounce here. And underneath it, your second target is always the 236 fib. So we've hit that second target here. From here, I would expect a bounce back into the middle of this range and back to back test these daily moving averages to see if we're going higher or lower or not. So I am looking therefore for a bottoming pattern in ETH. Now, sharp-eyed will say, gosh, we haven't quite tagged that 3,000 level, haven't quite tagged that 236 FIB, so we could retest these lows tomorrow and do one of those crypto, you know, where you make a high, like here, high, slightly higher high, that's your reversal. You know, we see that so often in crypto. So let's see if we can make a base in ETH as well at this $3,000 level. And if we do that, let's put our, again, let's zoom out 4 hour here, put our fibs on the other way from this whole swing high to low. I'd be looking for a first target back to that either daily 20 moving average or a 236 fib from this high to this low, and 3,290 then would confirm that's kind of going to be our confirmation level. Maybe a slight tag lower, depending if we make a lower low and retest this level tomorrow. So for me, you know, a retest that holds here, you know, double bottoms, double tops, false breakdowns, they're really nice signals. So that's what I'm watching for in ETH. I am being patient. Remember, we could have quite a few more days of sideways chop here, and so I'm just looking to trade it with really good signals, and then be ready for when the big move comes again. Okay, let's take a look at one more that's doing really well, which is Solana. Now, big picture in Solana, this is a weekly chart. We are sideways at these previous lows. We could also say from this high to this low, just like we looked at in ETH, that we are sideways holding this 61.8 level, and that if we continue lower, so if we lose 132.5, we're likely to continue lower to 97, and that round number 100 has been a little bit sticky when we've been here before, so that would not surprise me. We could also say, looking at these weekly moving averages, if you hold underneath the 20 moving average, you're likely to pull back to this 50 moving average on the weekly. If we look at the daily though, just like Bitcoin, just like ETH, Solana is at that 200-day moving average, a little bit sideways at it and holding on. Now I have to say, I think when I look at this Solana chart, it's very tempting to be quite bullish. There is one reason why I think that this Solana chart could do this bigger pullback to 97, unlike ETH, which of course has got the spot ETF inflows helping it. And the reason is fib patterns. In Solana, if I draw fib retrace levels from the high we made in 2021 to the low that we made in 2022, December here, you can see that we reversed at the 786 fib level. When you do that, your first target is usually back to the 38.2, which is again back to this 100 level. And this really is a kind of bounce level. So I could be wrong. That's basically where we're going to go if we continue and we get stuck underneath 132 in Solana dollar. Line up to buy basically at 97 to 100. One of the reasons that I think, like Bitcoin, you know, we could end up doing a bigger triangle. So we could see a first swing, and then we could do a second swing, and then we could do this. And, you know, this is also a wave 4. If we look from the lows here, 1, 2, 3, we're in a big wave 4, and we've got another leg higher. And so it would still be a wave 4 even if we came down to 100. But sometimes in wave 4s you do see sideways triangles or patterns as well. So this support is support until it actually breaks, and it hasn't actually broken yet, let's put it this way. And what we could see in Solana, remember, we could just see a bigger 3-wave bounce back here. 163 kind of would be my first target based on these fib levels on the upside. I'm not sure though. It's not quite a good enough buy signal yet on the daily, so I'm watching it to see which way we go, whether we continue lower or potentially whether we could bounce from here. Okay, most of these other smaller altcoins, you know, they're really going to need to see the big boys find support and move higher first. So those are the ones that I am watching. Just remember, we could be in for another couple of months of sideways chop before we bottom. It's really a matter of looking for the levels and the best opportunities in that chop. And that's what I'm going to do. Good luck.